Before we start the video, I want you to subscribe to the best Telegram channel at the first link in the description, where we show our earnings on cryptocurrencies, and not only. Our capital that we manage is more than $3 million. Thanks for subscribing. Also in the description is a links to verified exchangers when you register, on which you get a welcome bonus from me. Let's get to the video. Folks, the SP 500 had a frenzied daily rally and even managed to drag Bitcoin along for a bit. But the growth is on pause again, and the fate of whether we see the continuation of the pump of risky assets and Bitcoin at 20,000 or this bull trap will be decided in the next 10 days. What will happen and what to expect? Let's break it down. If you follow Cryptanic on Telegram, you know that the pump happened on the wave of very positive reaction of investors to the press conference of the head of Fed's Jerome Powell. He considered it possible to lower the rate increase already at the meeting of December 14. And it was very welcome news. And to make you understand how omnipotent Mr. Powell is now, let me bring in the opinion of the richest man in the world yet, Elon Musk. He's calling for the Feds to cut rates before there's a recession. And I didn't say for nothing that Musk is still the richest man in the world, because if this very recession happens, we could be faced with a sell-off of Tesla stock, which forms the bulk of his capital. It's important to remember here that this year, USA was already in a technical recession, but didn't acknowledge it, calling it an expected economic slowdown. According to GDP data for the third quarter, the economy is showing growth again. And on the one hand, this cancels out the recession and should make Elon Musk happy. But he looks ahead and correctly understands that GDP growth is actually bad news, which allows the Feds to raise the rate even higher than they planned. And Musk is not alone in his concerns. Here's an excerpt from a forecast by JPMorgan analysts who expect another drop in the SP 500. To recap, we are lowering our 2023 earnings per share forecast for the SP 500. From $250 to $205 on the back of weakening demand and pricing, further margin contraction, and lower buyback activity. In the first half of 2023, we expect the SP 500 to retest this year's lows as the Fed tightens weaker fundamentals. Even before the recent rise, I posted another bearish outlook for the USA stock market on Telegram from another bank, Morgan Stanley. And it's worth noting here that after the recent rally in stocks, this forecast is still relevant because it can be seen as a rebound on expectations from the first policy easing. The market was hesitant to see if this news would happen and didn't price it in advance, but now it's there. Which begs the question, at the expense of what to continue to rise? What Elon Musk and the banks also warned about was Jerome Powell's speech, namely the possibility of raising the rate to a higher value than it was stated before. That is 5% or even higher. And if you remember the reports of the leading companies of the SP 500, and especially their forecasts for the next quarter, there can be a lot of disappointments for investors, which will lead to a new sell-off. For example, as strong as if we look at the stats of the top companies, Tesla, Amazon, and Meta, in the last 3 months. Of course, you can never trust the bank's forecasts, and neither can Elon Musk, really, because, in the market, everyone is only pursuing their own self-serving goals. So next we're going to break down the possible scenarios of further events, including a reversal of the markets right now. Why are we even paying attention to what Fed is doing, and how stocks are trading? Since early 2022, first cryptocurrency and the SP 500 index have shown high correlation, actually trading in one direction. It's been broken the last couple of months, but it's not because the markets have decoupled from each other, and investors don't see them as a whole, as risky assets. And because scam FTX and other bad stories have sent Bitcoin updating the bottom, separate from stocks. These same problems are not allowing us to grow while following stocks right now. Now the situation has partially normalized and we can talk about a future resumption of correlation. The question is whether there will be further growth. In a little more than 10 days, namely on December 13, the USA inflation data will be released. And the next day will be the first meeting, where they will make a rate decision. A month ago, Inflation in the USA finally fell below 8%, and that was the foundation for the current growth. The good news came from Europe the day before yesterday. Inflation slowed a bit there as well and is back to 10%. And if this trend continues, then of course the bankers could be wrong and you could shave their short positions. For those betting on growth, it's important that inflation in the USA continues to decline, especially if it does so again, stronger than forecast. This would signal a loosening of Fed's monetary policy, meaning they will slow the rate hike now and not raise it too high in the future. In that case, we can expect a so-called Santa Claus rally. In numbers, it could be about 4,300 on the S&P 500, and for Bitcoin a return to the area of $25,000. And for Bitcoin, it will also be a breakout of the downtrend line that we started back in April of last year, when we reached $64,000. Can there be more growth, and will such growth be a signal for global growth? I can't know the future, and I'm only sharing my personal opinion, but the world economy has one foot in recession and the first quarter of next year could be very problematic. There are wars and a coronavirus in China, where people are already protesting against and having to be broken up by local police in chemical defense suits. Yes, and the Feds will still continue to raise the rate further, albeit more slowly. And Musk was saying that to avoid a recession, they need to move to lower rates, not freeze them. That being said, there is absolutely no prerequisite for the latter at this point. So if you're expecting a fast bull market back in 2023, it makes sense to bet on a dramatic change in Fed's policy. Right now they are keeping the inflation target at 2%. But if they increase that level to at least 4%, that would be a signal that in another year or two we will see a rate cut and the printing press on. As for the bearish scenario that the banks are promising us, we should first get a disappointment on inflation, e.g., it stops falling or, even worse, rises a bit. That would be an excuse for the Fed to recall its dreadful tale of sticky, high inflation for a long time and keep the rate hike high. Going forward, working off this news and expectations of a global recession, the stock market could go back to this year's lows and Bitcoin would be stuck in a sideways position between $17,000 and $15,000. That said, I don't expect, yet, a massive drop in Bitcoin and the rest of the cryptocurrencies. The scam FTX had a good moment. We've already updated the bottom. So those who are betting $10,000 on Bitcoin, for them, I only see one possibility for now. Of course, assuming there are no new high-profile scams, when there is a massive panic sell-off on the S&P 500, with targets worthy of a real crisis, minus 50% of the current high. There may be high volatility on crypto market today, too, due to the release of labor market data in the USA. Yes, that is also affecting. Watching and informing you promptly in our Telegram channel. Subscribe at the link in the description and like the video if it was useful. Thanks for watching, your Cryptanic.